Stephen, where do you see oil heading?
Right now, Trish, in the immediate term, I still like the market lower. We've been in a range now, and this is the NYMEX crude oil contract we're talking about. And we've been in a range of between $55 and $45, just to keep the numbers round, for the past 2 months. But we're now at a situation where crude oil demand is at its weakest. We are in now the refinery turnaround season, the maintenance season. So we're simply not boiling the usual amount of oil that we will be in, say, 4 or 5 months. Now, you add to this the potential threat we have from the USW strike, U.S. Steelworker strike, on refineries. And upwards of 2.6 million barrels a day of crude oil demand is now vulnerable to this strike. So we have the situation right now where we don't have
a positive effect on oil prices, right?
I'm sorry, say that again.
How is that affecting oil prices? If you don't have the workers there, helping to refine the oil or to get it out of the ground, then theoretically that should affect demand, which should have a positive effect on oil prices.
Well, it should have a positive effect on one side of the oil equation, right? Because if we're putting fewer crude oil barrels into the refinery because these refineries are shut down for maintenance, well, that's a hit to crude oil demand and therefore weighs on oil prices.
Okay, so let me ask you what you're thinking in terms of prices then. We've seen Goldman say low 40s. We've got Gary Schilling, who we all know is very bearish a lot of the time, if not all the time. But Gary is saying, look, we could be back at $10 a barrel, which is the range that we were in back in 99, 2000. Is that something you're considering, Stephen?
It's absolutely possible, and we say this because we look at the way the option prices are being traded, and there's an actual active market for $20 puts. So that is protection of oil going below $20 a barrel. So it certainly is possible. We're looking at a situation, Trish, we have to keep in mind, when is the last time oil prices collapsed because of good global economic news? The next time, Trish, will be the first time. So this is the canary in the coal mine, and this should be sending a signal around the world that everything is not rainbows and unicorns economically. There's a lot of trouble around the world economically, and I believe this is being reflected.
That said, Stephen, I still go back to what I've been saying all along, that the consumer has not felt connected to this recovery. It has been a recovery that has helped investors for sure, as the Fed has kept the spigot on with these incredibly low interest rates and quantitative easing 1, 2, and 3. But now, perhaps, this is the one thing the consumer needed to feel a little bit of a break, and consumers are going to have that much more money in their pockets. So we'll see what the overall effect is. We hope certainly it's net positive on the economy.